This is Rod Kusin and Spooman for Risk on May 4th, 2010. Our video today is going to focus on the risk tick strategy. TradeStation distinguishes a strategy from an indicator in that a strategy is capable of producing buy and sell signals. Of course, our strategy does that as well. Indicators, however, do not produce buy and sell signals. Our strategy, however, is really more of a tool, due to the fact that there are a variety of different ways that we can set this up, and we're going to demonstrate some of these ways in this video today. This PowerPoint slide shows essentially 4 different strategies that we have working on one of our charts. In the left-hand column, we have the input fields, and in the 4 columns to follow are the actual settings. We won't go into all of the details on this, but suffice to say, in this first section, this is how we set up our group reversal system. Our group reversal system, in this case, is actually working behind the scene, tracking an additional 7 other charts, and is feeding the results of that chart, those charts, into the strategy to determine when the conditions exist to pull a trade. Now we further filter those trades by the way of this next section here. This section permits us to use a combination of stochastics and overbought and oversold zones on those stochastics. In this case, for example, we're running one section that has 3 different tick intervals, 300, 500, and 700. Here we tell the strategy how many out of that group of 3 we're going to look at. This field here establishes whether there is a crossover of slow K over slow D. And then in the next field, here we set up the overbought, oversold zones. We have a secondary group of 1100, 25, 80, 41, 80, another set of stochastics where we have slightly different settings. Again, we're using a crossover, but a broader overbought, oversold zone. And in a third section down here, we're using bank with a 40 tick on a 40 tick increment, where we need the stochastic to be either at 20% or below for a buy signal, 80% or above for a sell. And you can see the variety of different ways that we can set this up via this slide. So here we've got a 30-70 zone, 25-75, 10-90, and again a variety of different tick intervals that are being tracked all simultaneously. Here's another chart that we're also running a group of 4 different strategies. Same kind of input information in the left-hand column, but a variety of different settings shown here. We've adjusted the overbought, oversold zones. And we've also adjusted some of the secondary tick intervals with their respective crossovers and or overbought, oversold zones. And then finally here, again, we're continuing to track bank. On this particular strategy, we're adding some additional requirements. These 3 tick intervals are filtering the trades based upon overbought and oversold zones of 10 and 90. using 2 out of 3. And then here we're back to bank again. Let me show you one last slide. Chart 5 is another group of 4. And you'll notice in this particular case, we've changed the overbought, oversold zones, and we've increased the tick interval. Prior to this, we were looking in strategy 2, the maximum tick interval was 67.60. Now we've raised that to 10,950. Here, all the way up to 17,710 on our second group. But you'll notice we've got that further filtered with both bank and another tick interval that goes all the way up to 28,650 using an overbought, oversold zone of 10 and 90. So point of the matter is there is tremendous flexibility that's built in to the tick strategy tool. Let's take a look at some of the results that we received today. Here is the performance report for the first group of strategies that we were running in chart number 1. It's pulling a lot of trades. And we are not running any kind of a stop on this particular group of strategies. However, we are running a profit target. The profit target set up in this set of strategies is only set to 6 ticks. So we get a variety of different signals based upon the different strategies, and accompanying profit targets are hit based on 6 ticks. And we could go on. Let's take a look at another strategy. The group of 4 strategies set up in chart number 4. Here's the performance report that you see here. Had a little bit of a drawdown into trade number 7, and then we came back up for a good profit with 22 trades. We have considerably less trades because of what we are requiring out of the system. In this group of strategies, we have no profit target, and the profits are simply being accomplished via swing trading. Here's our first trade of the day based on this set of strategies. Then a short here, profit taken over here, some additional trades here, 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 and here. Short here, long down here, again a short here and here. And here were the last group of trades prior to the close. Long here, short, got taken out here, long again here, short again there. Now in one of our other charts, we have another set of strategies that are running there. These strategies are set up to pull very quick trades, and lots of them. And as you can see, 300 trades coming out of that particular group of strategies. Nice profit, but you can obviously recognize that that's way too many trades. But we have that set up to trade multiple trades using the same strategy. Let me repeat that. This setup permits us to pull multiple trades using the same strategy. Every time we get a signal, we get a new trade. And so we can get multiple signals using the same strategy rather than just one. So that's why we have so many of them. Rather than just one signal, we're allowing this to pull multiple trades using the same strategy setup. So come visit us at RSKsys.com.